looking at it from the 1,000-mile view. I understand there's two types generally. There's cash value, if you will, and there's, or whole life, I think they call it, and then there's something called term. I believe, but I'm not certain, but WAEPA is in the, which camp are they in?
Right, we are term insurance, and then we're even in a subcategory of that. We're group term insurance. Permanent life insurance, our policies are very expensive. They have generally level premium. They last throughout your life, and they accumulate a cash value. And there are different ways that these policies accumulate cash value. The two principal ones are a guaranteed return type policy. That's a traditional approach. The second is variable life, where the cash value gets invested in the market, if you will. Those are things which, over time, the cash value starts to equal the amount of money you put into it. So those really are investment vehicles as well as life insurance. It serves two purposes: investment plus the death benefit as you get older. The term life insurance is just amount of coverage at a point in time. And again, like we said before, the needs change over time. So we can talk about that a little bit if you want. But it doesn't accumulate any. You don't get any return of premium. If you don't use it, think of it like auto insurance. You pay into your auto insurance policy, and with the exception of things like good driver discounts, that kind of thing, generally it's just simply an expense. It's a cost of living, if you will, in my opinion. It's the cost of being a responsible fiscal partner in your relationships and your obligations. So its premium tends to go up over time as the risk changes. Term insurance does, as opposed to whole life insurance, which stays level throughout your life. But with term insurance, you start at this, and at the whole life, you're way up here. You're 5, 6, 7 times the premium. So it's a very different product. And ours is even a little bit different still in that we insure only civilian federal employees. We have a single group policy which aggregates those risks, and that's how we develop our rates. And federal employees are a great risk. So our rates are low, and it's partly because of that feds live well and they live long.
Okay, so that I understand your graphics, if I have a whole life policy, the premium is set at the day I buy the policy, and it's pretty much going to stay the same until either I cancel the policy or I unfortunately meet with passing.
Yeah, and I hesitate to put any firm rules in here because the life insurance business has been around for a couple of 100 years. There are many variations on these plans, but generally, it's a level premium product that accumulates cash. So you get two pieces. You get a death benefit and you get cash.
And I think that's the important difference between that and term. Term, it's generally not going to build up any cash.
Right, no cash.
And the reason that the premium is higher later in life, the person is closer to the end line later in life.
Right.
So the funding has to be there, whereas the term starts early and stays late.
Right.
Is that fair?
That sounds good.